Numbers on the top and bottom line, $3.18 billion. That is much higher than what analysts were expecting. Earnings, a profit of $1.95 adjusted. And now you're seeing the stock up over 6%. The company says lodging bookings were the highest in the company's history, while revenue and adjusted EBITDA were the highest for any second quarter. So once again, you have a travel company painting a very strong story around the recovery in travel. Those were the comments that CEO Peter Kern says here in the press release, and that's why you're seeing the stock up. But as you were just discussing with Stephanie Lingscott, it is all about the third quarter, the pace of growth that they're seeing going into the fall, especially as business travel picks up. This is a company in the last 3 months that has gone through a restructuring. They've added a number of tech executives to their team to allow them to go after that business traveler. Is it starting to work? We will hear from CEO Peter Kern on the conference call at 4:30 p.m. Eastern, and he will then sit down with us first on CNBC tomorrow morning at 10 a.m. Guidance, Scott. Once we get more clarity on that, I'll be sure to come back with that.
Yeah, please do, because that's what matters most. No surprise that maybe on the early pop of the stock is on the current report. It's the look forward that matters most. So let's go back to our conversation. Seema, thank you. I'll see you again, I'm sure, shortly. Stock's up better than 7 1/3% here in overtime. This move in tech has been dramatic. It's been critical to why the market is where it is. Do you see that continuing, and that's why you think the rally still has legs?
Yeah, I think if you have lower growth, lower inflation, but steady growth and lower inflation, growth is going to outperform value, and especially since it actually has been a massive underperformer year to date. So these stocks are still down double digits, Scott. I mean, you know, I've been adding to Broadcom, right? And by the way, I added to Fortinet today.
So you're looking for places to be a buyer?
Because they're down still a lot, and they're reporting earnings that aren't pretty decent, right? So, I mean, I think there are opportunities. I think the rally, though, will continue, and tech and comm services is 35% of the S&P 500. So if they do better, the market probably does better.
All right, let's expand the conversation now. Solus Alternative Asset Management's Dan Greenhouse joining us, along with SoFi's Liz Young. It's good to see the both of you. Liz Young, how about that? The rally will continue if tech continues to perform. Does that mesh with your view?
So I agree with what Steph said about for now. I think this is good. However, this rally, in my opinion, has been predicated upon the idea that the Fed would either be scared by growth slowdowns or satisfied with the progress that they've seen. And I don't think they're either of those things. So I think we're still going to see tightening, and the market got a little bit ahead of itself, expecting more of a dovish pivot or some kind of pause in fall, which I don't think is going to happen. So I wouldn't be surprised if we give some of this rally back, especially in tech, because those names have seen just kind of pure multiple expansion in these last few weeks. But I do still think that in August, if we see dips, those are buying opportunities, and you want to be present in the market for the second half of this year, because I think the third and fourth quarter could see some good upside. Now, not in a straight line, but I think it could see some good upside as the market gets satisfied with lower inflation and with the idea that we're not headed into a huge recession, at least this year.